Dramatic orchestral music swells and then fades into a low, ominous hum. Newspaper headlines flash across the screen. Dow plummets, financial crisis grips nation, bailout fails. Stock tickers race downwards in a sea of red. Quick cuts show the worried faces of world leaders, traders on a chaotic floor, and ordinary families watching the news in disbelief. But before the storm, there was an illusion of unending prosperity. The early 2000s were a time of unprecedented growth in the US housing market. It seemed like everyone was buying a home, chasing the American dream. Lenders, eager to capitalize on this boom, began offering subprime mortgages to borrowers with poor credit history. Simple animations illustrate these risky loans being handed out like candy, fueling a nationwide buying frenzy. This wasn't just about home ownership. It was about the belief that housing prices would only go up forever. Behind the scenes, Wall Street wizards were bundling these mortgages together into complex financial instruments called mortgage-backed securities, or MBS. Animated graphics show thousands of individual mortgages being sliced, diced, and repackaged into intricate high-yield bonds. These securities, often given misleadingly safe credit ratings, were sold to investors around the globe. It was a financial house of cards, built on a foundation of risky debt. By 2007, the first cracks appeared. Homeowners began defaulting on their loans, and the housing bubble burst. Graphics show home prices plummeting, and for sale signs quickly turning into foreclosure notices across suburban landscapes. The tipping point arrived in September 2008. The iconic image of employees leaving the Lehman Brothers headquarters with boxes in hand became a symbol of the impending collapse. The fourth largest investment bank in the United States had filed for bankruptcy, sending a shockwave through the entire financial system. The credit markets, the lifeblood of the global economy, froze solid. Visuals shift to empty trading floors, screens filled with static, and bankers on frantic phone calls as trust between institutions evaporated overnight. The intricate web of global finance was unraveling at an alarming speed. The crisis quickly went global. A world map lights up with red indicators, showing economies from Europe to Asia spiraling into recession. In response, governments scrambled to prevent a total meltdown. We see visuals representing the Troubled Asset Relief Program, or TARP, as central banks injected trillions of dollars into the failing system to prop up major banks deemed too big to fail. But for millions on Main Street, the damage was already done. The screen fills with images of long unemployment lines, snaking around city blocks, and widespread public protests, like the Occupy Wall Street movement, as citizens expressed their anger at a system that had failed them so spectacularly. The Great Recession had begun, leaving a lasting scar on the world economy and changing the landscape of global finance forever.